Welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today it's all about watching financial markets and their reactions to the US war on Iran and its long-term impact on US fiscal management and their November election prospects. It's going to be volatile, a yo-yo mix of gloom and temporary relief rallies. During the pandemic crisis, we had essentially a fiscal and central bank put policy to deal with that crisis, an implicit policy promise where the government and the central bank acted with programs to set a floor for employment and asset prices, typically by purchasing assets to inject liquidity during market downturns. But this time, there seems little appetite to reprise that if things get really unstable. In the week ahead, locally, we'll get some mortgage data for February, but apart from that, data releases will be light. Today's Fonterra results will be interesting, however. In Australia, Wednesday's February inflation data will be the key thing we're watching. And globally, it'll be all about actions and reactions during the fourth week of attritional conflict in the Persian Gulf and how that affects oil and natural gas flows. In the US, there are a range of sentiment indicators for March out this week, including PMIs, the University of Michigan Consumer Survey, and many regional Fed surveys. In China, there isn't much data ahead this week, just industrial profit data. In Japan and Singapore, they too will be updating inflation data. But we'll need to watch US Treasury yields, which jumped at the end of last week and to their highest level in 9 months. Investors seem to be coming to realise that Trump doesn't know what he's doing, and the inflation impacts from these mistakes will likely deliver a much more hawkish US Federal Reserve, despite the Warsh and Moran inserts. We may be all in for rising benchmark interest rates. And it won't help us that credit rating agencies are looking at these impacts and starting to consider downgrades for sovereign and corporate risks. Risk premium rises will be on top of that benchmark rise. Meanwhile, International Energy Agency says that market disruptions from the US-Israeli conflict has triggered the largest supply disruption in the history of global oil markets. They say we should all be working from home, and if we drive slowly. American petrol prices are up a third in just 4 weeks. That signal from the world's largest economy will be sharply inflationary. By different means, Trump is effectively imposing a giant carbon tax on everyone. And what will flow from that? Sharply higher inflation and sharply lower global economic activity. That is the definition of stagflation. Everyone suffers because monetary policy needs higher interest rates to restrain the inflation risk, and that undermines the global banking system because stagflation is the worst scenario for bank lending. Meanwhile, Canadian retail sales rose in February by 0.9% from January to be 1.8% higher than a year ago. But Canada's producer prices rose much less than expected in February. They're up 0.4% from January when a 1.1% rise was expected. For the year, they're up 5.4%, however. Taiwanese export orders are still growing fast, but the February rise was only 24%, and by their standards of the 60% January rise, this seems a letdown. Analysts had expected another very large rise and so were disappointed. But anyone else would have been over the moon with a 24% rise. In China, foreign direct investment flows fell 5.7% in February from a year ago to 161 billion yuan, 22% lower than the same period in 2025, and the lowest for this period since 2020. There were some positive sectors in high tech, however, but mostly this is a weakness Beijing won't appreciate. And Chinese customs data shows why the silver price jumped earlier in the year. China brought up 700 tons of the metal in January and February to shore up its strategic reserves. But the buying seems to have eased or stopped now, and we are seeing the price dive now. And we should probably note that with the Australia-New Zealand Closer Defence Relations Statement, there is growing expectations that the two countries will buy its replacement frigates from Japan. In South Australia, the incumbent Labor state government has easily won re-election. Advanced results show it winning 33 of 48 seats, with the Liberals suffering a heavy reduction to 10 seats. With 98% of the polling booths counted, so far Pauline Hanson's One Nation Party is not ahead in any of them. And we need to note that Fitch has changed their outlook for the New Zealand economy, shifting its AA+ rating from stable to negative on the basis that debt reduction is now far less likely for either the private or public sectors. The US Treasury 10-year yield is now just on 4.39%, unchanged from Saturday at this time, but up 11 basis points for the week. And the price of gold will start today down $83 from Saturday at $5,490 an ounce. That's down $528 an ounce, or down 10.5% in a week. And that's its largest weekly fall in more than 40 years. Silver is down another $2 at $67.50 a barrel, a 16% weekly retreat. American oil prices are holding at just on $98 a barrel, while the international Brent price is up $1.50, now just over $112 a barrel. And the Kiwi dollar is little changed against the US dollar from Saturday, down 10 basis points at 58.3 US cents. Against the Aussie, we're also little changed at 83 Australian cents. We're down 20 basis points against the yen. Against the euro, we're down 10 basis points at 50.4 euro cents. That all means our trade-weighted index starts today down 10 basis points at just on 62, but up 40 basis points over the past week. And the Bitcoin price starts today at $68,741 and down 1.3% from Saturday, down 3.3% from a week ago. Volatility of the past 24 hours has been modest, though, at just on plus or minus 1.8%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora. I'm David Chaston. We'll do this again tomorrow.